Bitcoin traders are holding air breath today. After a volatile week, BTC is testing that key $68,000 zone again, and everyone's asking the same question. Can it hold, or are we Abu to see another dip? In this video, we'll break down the latest Bitcoin price action, key resistance and support levels, what the indicators are showing, and how macro factors like ETF inflows and the U.S. dollar are shaping the market right now. So grab your coffee, let's dive in. Bitcoin started the week on a positive note, climbing from $66,500 to just under $69,000. But that bullish momentum didn't last long. We saw a rejection near the upper resistance zone, followed by a quick correction back to the mid-$67,000 range. Traders who were expecting a clean breakout were disappointed, but this kind of price action is typical before a larger move. Right now, BTC is consolidating, building up energy for its next big swing. On the 4-hour chart, we can clearly see Bitcoin moving in a tightening range, higher lows since the last dip, but lower highs since the rejection. That's forming a symmetrical triangle pattern, which usually ends with a strong breakout in either direction. The immediate resistance sits around $68,800, and the nearest support is around $66,700. A clean break above resistance could easily send BTC towards $70,000. But if it loses support, we might see a retest of $65,500 or even $64,800. Now, let's look at some indicators. The RSI on the 4-hour time frame is neutral, sitting around 52, which means Bitcoin has room to move either way. The MACD is starting to curl upward, showing early signs of bullish momentum, but the signal line hasn't crossed yet. That tells us the market is still indecisive, waiting for volume to confirm the next direction. Meanwhile, open interest in Bitcoin futures has increased slightly, suggesting traders are positioning for a big move. On-chain data shows that long-term holders haven't been selling much. That's a bullish sign. Exchange reserves remain low, which means less selling pressure from big wallets. At the same time, ETF inflows earlier this week added around $150 million to Bitcoin exposure, again a positive sign for midterm sentiment. However, the US dollar index DXY has been ticking slightly higher, and when that happens, Bitcoin often slows down. So, macro is mixed, some green lights, some caution signals. So, what can we expect next? If Bitcoin holds above $67,000 and breaks $68,800 with strong volume, the next major target becomes $70,000 to $70,500. Above that, the chart opens up to $72,000, which could trigger a wave of FOMO buying. But if BTC fails to hold that $67,000 level, we could easily see a dip towards $65,000 before any new rally. For short-term traders, it's all about watching those levels, especially the 50-day moving average, which currently sits near $66,200. From a longer-term perspective, Bitcoin is still in a healthy uptrend. Every correction so far has found higher support. That's exactly what we want to see in a growing market. Institutional demand remains solid, and as we move closer to year-end, liquidity tends to return to the market. So, while we might see short-term volatility, the bigger picture for Bitcoin still points upward, especially if we can stay above that $65,000 zone. To wrap it up, Bitcoin's next few days are critical. A breakout above $68,800 could send us right back to the $70,000 mark, but a break below $66,000 would invite another